other side of the tariff knife is that if there are markets, though, where you're making something that's fundamentally innovative, where you are but one maker, the problematic part of where tariffs really affect the U.S. consumer is then the price of that product, of which there are no competitive alternatives, can go very, very high. And that's inflationary. And I think that slows down consumption. And then if that consumption is not just of something that's a nice to have, but a must have, then it becomes problematic. And so you could see where tariffs could impact certain industries.
Hey guys, welcome to Everyday Finance. Another wave of intense volatility has hit the cryptocurrency market, causing the price of Bitcoin to drop 7% in just one day, Ethereum and XRP to drop 9%, and Cardano and Dogecoin to drop by double digits. A number of factors played a part in this decline. First, President Donald Trump's tariffs on imports from important trading partners like China, Canada, and Mexico have raised fears of a possible global trade war. In a Fox News interview, the president declined to address whether these tariffs could cause a U.S. recession, adding to the already existing economic uncertainty. Furthermore, data from March 9th showed that February was the 30th consecutive month of producer price deflation, with China's consumer price index experiencing its steepest decline in 13 months. Investors are looking for safer assets as a result of these concerns about the expansion of the world economy. Technically speaking, a lot of investors seem to be locking in gains before significant occasions like the White House Crypto Summit. Although there are still unknowns surrounding the global economy and the cryptocurrency market, analysts think that the advantages outweigh the disadvantages, indicating that prices have a good chance of rising again in the upcoming weeks. President Trump's strategic Bitcoin reserve and digital asset stockpile are among the tailwinds, according to White House AI and crypto advisor David Sachs, who also highlighted the possible effects these developments could have on the cryptocurrency market in the years to come. Watch the video.
I think that this is the first week where I've seen the first real schism in how people are interpreting what's actually happening. I think that Trump and Elon were very much in a honeymoon period until this week. And I think there was the benefit of the doubt. But what I saw on X was a real divergence where, on the one hand, there were people that were basically saying, Doge is deranged, Elon is crazy, Trump is lighting the world on fire in one camp, and the other camp saying he's sticking to the plan. And when I thought about this a little bit, if you went back to November the 5th, I do think it's important to remember that we were at this moment where you had this fork in the road and you had all these important issues where I think the best way to generalize it was that the Democrats believed that the lines should continue to be blurred. So whether that was on gender or race or merit versus some other immutable trait, or fiscal and monetary policy, things were just getting more and more blurred. And then Trump and Elon basically showed up and said, actually, we want to refocus and we want to make the lines very visible and clear on all those dimensions. And a majority of Americans voted that in. But I think what you're starting to see now is the difficulty in actually implementing that plan. And what I mean specifically is tariffs are very nuanced and complicated. On the one hand, there's these short-term wins. There's these impacts. You could deem them positive or negative to the dollar. There's impacts to U.S. bonds. There's impacts to U.S. bond markets. There's impacts to how countries deal with foreign reserves. And then there's this impact that happens when the markets react to a tariff. And then Trump takes that off the table and then they snap back. So you have this weird set of boundary conditions right now. So I think right now we're in the very difficult part of sorting through what the long-term implications are. And I can get to some of them later, but I think that's where we are.
I think it's really interesting. The goal of tariffs in your mind for Trump is fentanyl?
No.
Finance related?
No.
Give me your definitive what you think this is about.
I think what tariffs allow us to do is rebase the long-term reliance on the US dollar. It allows us to rebase our ability to fund our own deficits. And it allows us to rebase the long-term ability for American companies to be economically vibrant. And what I would say is the other side of the tariff knife is that if there are markets, though, where you're making something that's fundamentally innovative, where you are but one maker, the problematic part of where tariffs really affect the US consumer is then the price of that product, of which there are no competitive alternatives, can go very, very high. And that's inflationary. And I think that slows down consumption. And then if that consumption is not just of something that's a nice to have, but a must have, then it becomes problematic. And so you could see where tariffs could impact certain industries. For example, if there are innovative drugs, I think that's problematic. If there are innovative technologies of which there's only one vendor, that's problematic. So all of those need to get sorted out. But on balance in commodity markets, like look at autos. Autos is a perfect example. There are so many purveyors and providers of autos. There's OEMs all around the world. And so to have a compensatory system doesn't seem like an unreasonable thing, where it's a tit-for-tat tariff. But in other markets where if you need, for example, a specific piece of equipment from ASML to build a chip, and now all of a sudden that machine is 25% more expensive or 30% more expensive, and they pass that cost downstream, it becomes very speculative and it becomes a little bit more fragile, I think.
President Trump's proposed tariffs are now having a significant impact on the world economy and financial markets. Targeting important U.S. trading partners, his administration has already enacted and proposed a number of significant tariffs. The United States imposed 25% tariffs on the majority of imports from Canada and Mexico on March 4th, 2025. The goal of this action is to put more pressure on these nations to stop illegal immigration and drug trafficking, particularly the entry of fentanyl into the United States. Canada responded by enacting 25% tariffs on $30 billion worth of American goods, with plans to raise the amount to $125 billion. Additionally, Mexico has hinted that it will declare its retaliatory actions, which might involve tariffs. President Trump eliminated country-specific exemptions and imposed 25% tariffs on all imports of steel and aluminum on February 10th, 2025. The effective date of these tariffs is March 12th, 2025. Although there has been a lot of conjecture regarding the reasons for these actions, the administration maintains that they are required to safeguard national security and assist domestic metal industries in the United States. In a podcast, billionaire investor Chamath Palihapitiya and businessman David Friedberg talked about the problem and gave their reasons for thinking that these tariffs are an important step for the American economy.
Only thing harder than canceling an Adobe license is trying to cancel Wall Street Journal.
I was about to say Wall Street Journal.
That's the worst.
All-time Hall of Fame.
Let me just say something about the budget because Joe brings up something important.
Unbelievable.
I'll just say it again at the sake of being redundant. We're getting to the phase where the details are complicated and they now matter. So we've talked about repealing the IRA in its totality, right? So that was a statement, and there's theoretically a lot of money there. But the details now all of a sudden become complicated. FERC published a report just this past week. And what do you think it said was the percentage of incremental electricity that was generated from renewables versus non-renewables? I'll tell you the answer. It was almost 91% in December. So if you now tie two huge initiatives together, which is how do we find a budget that saves money and how do we continue to win in AI? Maybe you would have thought those weren't related. Well, guess what? We know that AI needs a tremendous amount of power. And whatever you thought you knew, actually, you had to re-underwrite because what Elon has shown is actually you need to now create these mega clusters, 100,000 GPUs going to 1 million GPUs. All of the power forecasting that we have is miscast. It doesn't even account for this. Number one. Number two, there are 35,000 applications into FERC to get approved to generate electricity. 35,000. That's going to meander through some administrative rigmarole. There is a 5-year delay to get a gas turbine into America and online. Okay, if you ordered one today, the fastest that you can get it turned on is 2030. The fastest that you can get nuclear turned on is 2035. So we don't have the ability to generate incremental electricity very quickly, but for renewables. But then if you rip out the IRA, there's many parts of the IRA, by the way, that are just trash. Nick, I don't know if you can find it, but Barry Weiss found this insane thing that made me so angry, which I'm happy to talk about, which was like a 30-day grant process that resulted in a $7 billion grant to some shell NGO.
Oh, this was throwing the gold bars off the castle
hold
the
on
last
a second.
day.
But the other part of the IRA, this narrow part, is what it did to reinforce tax incentives and tax equity, which is a $200 billion market that incentivizes that 90% of energy generation. So my point is that when you start to get into the details, when the House Ways and Means Committee has to figure out what part to put back, this is going to be hard because it's like, hold on, if you gut the whole thing, now all of a sudden you take 90% of the incremental energy generation incentives out of the market. You don't have enough electrons. There isn't enough electricity. So then you lose the AI race, or you start to lose it. I think the point is that we're now in the hard part where the details really matter. And on this pop-up NGO thing, to me, this is like the worst of America, and it makes me so angry. And I'll tell you my lived experience. So I'm on the other side of this. I started a company with these guys from Tesla to make battery materials in the United States in 2019. We grind, we put in tens of millions of dollars. We get a deal with a big OEM. And then you see these DOE grants. We spent millions of dollars. We file a very detailed plan to build battery metals and battery capacity in America. We got rejected. Okay. It was an entire year-long process. We got rejected. We put it past us. We kept working. We found more deals. We found a way to survive, raise a little bit more money. And then we applied again on some success, and we got a $100 million grant. Okay. That's what just happened this year. But then yesterday I read, and Nick, maybe you can throw this tweet up, this Barry Weiss investigation. Somebody in 30 days who was connected to the Democratic infrastructure had some shell organization that got a grant that was 70 times bigger than us. Like, we've made stuff. We have deals with OEMs. We had to validate it every step of the way. We were rejected once. So our process to get a $100 million DOE program was 2 years. These people showed up in 30 days and got $7 billion.
Similar to Cathie Wood, the founder and CEO of RK Invest, businessman David Friedberg has hinted that President Trump's recent tariff policies may be a sign of significant tax cuts in the U.S. The Tax Cuts and Jobs Act, TCJA, of 2017 was enacted by President Trump during his first term. It lowered the corporate tax rate from 35% to 21% and introduced individual tax cuts that will expire in 2025. The administration is currently thinking about extending these individual tax breaks and lowering the corporate tax rate for domestically produced goods to 15%. According to Commerce Secretary Howard Lutnick, reciprocal tariffs could produce about $700 billion a year, which could eliminate the national deficit, reduce interest rates, and boost economic expansion. By raising tariffs, this strategy seeks to transfer the tax burden from U.S. citizens to foreign companies, opening the door for significant individual tax reductions or even the abolition of federal income taxes. According to Cathie Wood, The current state of the economy is comparable to that of the early 1980s, when substantial economic growth was sparked by President Reagan's tax and interest rate cuts. She thinks that Trump's planned tax cuts and regulatory reforms might spur even more robust economic expansion than that of the Reagan years. Do you share this opinion? Kindly leave your ideas, remarks, and observations in the space provided below. For more content, remember to subscribe to the channel, like this video, and enable post notifications. Your assistance greatly aids in the channel's growth and helps the YouTube algorithm. Thank you for watching.